Alrighty. I think we are good to start. Ah, one sec. Make sure everything's good on my end to start here. Gotta look good on the camera, you know? Alrighty. Hello, everybody. I'm your boss, Joe Boss, and welcome to another trading stream and geopolitical analysis stream. We'll be covering some pivot point stuff for sure, and we got a lot of updates, and we're also getting news in right now as the stream is going by. Also, I look a bit yellower today on my end. I think I might have changed the calibration of my lighting a little bit. Let's see. How does it look when I change it here? Whoa. Yeah. Then, oh yeah, that's a lot. Cool. Oh yeah, but you can see it's like screwing up the green screen stuff. So it's either this one, and this one seems fine too, but it looks like it's still also screwing up a little bit right here. So we'll go here. Whatever works best. Alrighty, let's get into it. Let's get into stuff. Gotta move a handful of things over. So this actually is a volume footprint chart. I found out, hey, you know what? If I have TradingView Premium, I can use the volume footprints that TradingView provides. So it's a nice, cool little visualization. Yeah, you can see what levels people are buying and selling at. But yeah. And then this is a trade we put on, or at least I put on. So this was yesterday, or a few days ago. I had this trade on, got out. Took another small trade here. That one turned out to be a loser. And this one so far is going by so far so good. And then I made a plan to potentially trade down here if we come back down and this stops out again. I have a risk on expectation that all the countries in the world are right now pretty much conspiring to get this shit resolved with Iran. So I am not concerned about a perpetual decreases in like the euro, or there might be some hiccups here and there and whatnot, but when I'm getting news that the French and one of the largest French oil and gas companies is starting to instigate and starting to implement what is it, the technical term for it, maybe the economic term for it, it's they're putting a price cap. They're putting a cap on the price of gas. And so the French are getting involved in how much gas can be sold for. And this is some of the latest news that we're getting right here. So if we go to the 2026 around commodities crisis research, not research, this is the trade forum, so this is a trading thread. You can see French government, some fuels. Actually, I have a new little tool here. Check that out. Isn't that kind of cool? We can have this nice little zoom in effect. So yeah, French government, some fuel prices to be cut. 10 to 30 cents a liter. And then U.S. Secretary Wright, Hormuz tanker escorts likely by the end of the month. So that pretty much means within the next 10 days, probably. Or And, you know, again, by the end of the month, that's within 20 days. Call it 19, right? Within 19 days. But sooner than that. So, I don't know. Call it maybe sometime in a week from now. Sometime between the next 7 and 14 days. But, tanker escorts are coming. Oh, and South Korea also had fuel price caps starting Friday. Yeah. So a bunch of governments are starting to instigate these fuel price caps. So then there's a minimum impact on inflation. And hello, Harold. Nice to see you. I got some new visual tricks up my sleeve, right? It's not just, oh, I can draw and do stuff now. Like that. Do. There. Maybe a little thicker. Hey, there we go. So that's very nice. That's very, very nice. All sorts of good little tools there. And I'm going to put this guy back over on the other screen for now. If you want to get into that Discord, just go to the link in the description. That'll take you to a WAP link. And there should be a link to the Discord there. So yeah, that's the setup for your CAD that I've been looking at. If we look at DXY, DXY has been gaining a bit of strength here. A bit of strength. And we can unhide the pivots and let the pivots calculate for the day. Let's go ahead and set these to neutral so we can see more pivot levels. Hello, Ari. Nice to see you. Nice to see everybody's hopping in. Let's go ahead and check out maybe the weekly. So 6-hour chart. Okay. In my opinion, this is probably the latest you can get a potential setup for a standard bullish bias. Generally speaking, when price enters these green areas and you're setting up for this type of pivot bias, standard bullish, my general rule of thumb is you want to have the entry somewhere in the first third. So this is like right on the edge of that third. And the reason why is because in order to get the volatility to play out sometimes, you need enough time to go up here. Otherwise, you're asking for like a big fat bar that goes straight up. And the higher the volatility instantaneously you have on a single bar, the harder it is to set that kind of expectation. So I say try and get the trade in the first third, and then if this is your expectation to go up here, if this is your bias, then you generally have a bit more time for the trade to play out. It doesn't look like we'll end up hitting that here. And if oil does come under control, it'll be a lot easier to handle dollar. But right now, so much demand exists for US oil and gas, natural gas, that I'm kind of actually curious if that's going to result in the US dollar becoming even more in demand. Because if you want US oil and natural gas, especially from Europe, all these European countries that may want it, well, also they can't get it right now, even if they did want it and we're willing to pay out the nose for it, is because there's just not enough tankers. From what I remember, there was one company, like an Italian or Spanish. There was one shipping company. I think it was maybe a South Korean company, now that I recall, that had the only available tankers for oil and natural gas still in the Gulf of America, right? Gulf of Mexico. That could be filled and purchased to, take your oil and gas somewhere to actually pick up stuff. Everything is booked for a month out right now in the United States. So the company that still has those open ships, if they're even still there, they were charging an arm and a leg for that natural gas. So it's a new vector that has to be watched out for, because that extra kind of demand energy-wise for US exports now can also be a boon for the US dollar in the future at some point. I would need more data on the actually understand the magnitude that could have before I really commit to that idea, commit to that thesis. I'd want to see a bit more data behind how significant that is, but considering there are all these charts and graphs showing that the US is now like the #1 world exporter of oil right now, I genuinely wouldn't be surprised if it had an FX impact, a significant impact on the FX side of things. We can just go down from the top here. And look, there you go. Bullish bias setup. And it's also an expanded pivot. So these little icons here are called pivot condition icons. And no other pivot point indicator has these. All they do is describe what the current pivot point set is relative to the prior set. So when the volatility expands, you can see how the pivots from S3 down all the way down here at the bottom, all the way up to R3 here at the top, completely encompass the entire pivot range in the prior set. So that's how this is measured, how you measure expanding pivots. And then you have the opposite, which is compressed pivots, when R3, S3 is within R3 and S3 from the prior set. So you get this little thing here that says compressed when you hover over it. And right now, looking at next week's pivots, so these pivots are still not finished. They are currently developing, and as price moves, these pivot points will move. But this gives us an idea of what to expect for where entry and exit prices could be based on pivot point strategies for the next week. And you can even see that this expanded icon keeps appearing and disappearing because we're right now just on the edge of whether or not this S3 pivot right here will continue on and move past the S3 pivot of the current week. So whether or not you'll actually get a expanded condition to print here. And it's just nice because, you know what? Sometimes when you're zoomed in on the chart like this, you're not able to see S3 and R3. I mean, and sometimes you're looking right at the chart and you might have a compressed pivot set and you're like, oh, yeah, I'm just going to set my targets. There are some things you have to change about your bias interpretations, about setting a pivot bias, depending on the pivot conditions. And a really, really, really big one is when you have, for example, right now, expanded pivots. In order for you to have, let's say, set a standard bullish bias, like so. In retrospect, right, we can see in retrospect to hit the target. But at the beginning of the week, if this was your bias, you would have known that these were expanded pivots, which means if you wanted price to successfully hit this exit zone, you needed additional volatility catalysts to come through. When you have expanded pivots, in order to reach these kinds of targets past R1 and past S1, you need increased volatility. You need additional volatility generally, unless you have a really, really, really steady uptrend. That's just one green candle after another green candle after another green candle after another green candle with very consistent, stable volatility. But you don't usually get that all too often. Usually they come in big bursts like this, with a couple of red candles sprinkled in. So with expanded pivots, in order to hit these targets past R1 and past S1, you need to have additional volatility to reach those higher targets with expanded pivots. But it's the exact opposite with compressed pivots. With compressed pivots, it's easier to go past R1 and S1. It becomes easier. So then at that point, setting this kind of bias, it becomes easier to hit your stop losses based off the pivots. Now, this is probably where maybe adjusting your stop when you have compressed pivots to an ATR based stop can be actually a bit more helpful. See? Because this ATR based stop is based off a different measure that's going to help readjust your volatility. It's a different volatility adjacent metric. I know some people don't like using ATR as a metric for volatility, but in most circumstances, it's a decent approximation for volatility. Okay, so this is effectively a volatility-based stop. And so if you need a volatility-based stop going into compressed pivots, you know, ATR pivot is there to help out with that, but just know that, like, for example, this right here, this volatility is going up, but the pivot ranges, how wide the pivots go, are based on the high, low, open, close values of the prior period. It's not based on the bar-to-bar volatility, which is actually what ATR can help with. So if you're going into the next weekend, you're concerned that the pivots are too tightly bound, then an ATR stop might be helpful, but then again, you might want to try either a higher time frame at this point. Just to be frank, you might want to try watching things day to day with compressed pivots, because all you need with compressed pivots to really ruin your day and wreck a decent part of your account is you take on too much risk, first off, but also you have one, like, not even a really huge exogenous shock, but even just a moderate surprise to an economic event. I mean, this is not a huge move, right? But look at this. Like, this is a huge move. This is huge volatility. And then you have still volatility here. Big candles, red, green, red, green, red, green. This is, I believe, negative autocorrelation, where you're getting red, green, red, green, red, green constantly. So the volatility is still high, just high negative autocorrelation. And then when you go into here, you have these super compressed pivots. It's not going to take into account this negative autocorrelation. It's only going to look at the high, the low, open, and close, and develop these compressed pivots based off of that prior period, right? So the best thing to do for this is to be on this more conservative side. And sure, if you want to take a standard bullish bias shot, you can. And maybe you want to take a more moderate stop. I don't know. I believe this is a 2-time ATR, so maybe you do a 1-time ATR instead. I think 1-time ATR puts you right there. That might seem more reasonable, right? That might seem more reasonable. But it's the point of, you have to discretionarily set these things. You have to understand that these are the things that you can change, that you can set in the indicator, and actually, read the documentation of the indicator to understand you can put these things together. But also hanging around other people who use this indicator, who trade this indicator, and they don't, there's a lot of people who trade this indicator and they don't use these traditional pivot calculations. There's quite a decent number of people who love the Camarilla pivots, but they're by no means my favorite. I know a bit about the history of how the Camarilla pivots were made. There's like 3 different guys who say that they are the creators of the Camarilla pivots, and there is no one consensus calculation for Camarilla pivots. There's different types of Camarilla pivots, but there's no actual definitive, here's the formula for the Camarilla pivot points. It's really really weird when you get into it. And if anyone wants to chat with me about it sometime in Discord after the stream, I'll be in Discord hanging out, and I'll send some invites to the guys who are hanging out here in the text chat. So if you want an invite into the voice chat post stream, just go ahead and send a message. I sent everyone invites yesterday, and a couple people showed up. It was actually quite nice to have those after stream chats. But I also bet it's very, very nice seeing me actually cover some indicator related stuff. I said I was going to go ahead and start covering some geopolitical stuff this stream, so I think it was very nice to actually cover some pivot point related stuff. I just wanted to check this. Yeah, that is... Yikes. Yikes, yikes, yikes. That is not very attractive. But, you know, it's looking pretty bullish next week, actually, based off that. I mean, if you're staying above S1, if you stay above S1, I mean, I would start being a bit concerned once you're past S0.5 next week. But yeah, decent amount of bullish continuations next week, as I'm definitely on the more risk on side. And we can start getting into that now as to why that is. So if I do this, hey, look at that, I can move my window around like that. Because if I have this thing full screen, you see how I can kind of be in the way sometimes of the text and whatnot. So we're just going to make it this little window, have it popped out like that. And how nice is it? How wonderful is it to have this? I'm very, very happy to be on this damn system. It's been such a breeze. Such a breeze. So let's go down the road here. Yeah, a whole lot of people are very, very, very happy that Trump is doing what he's doing in Iran. So these are just people from Iran who literally are taking footage of all the bombs going off over the last week or so and are saying, well done, America, well done, Israel. And they're saying, thank you, Uncle Trump. Keep hitting them, Uncle Trump. Well done, Bibi. And it's just so many. It's just an entire 5-minute collage. They're hitting it, thank God. It doesn't matter. Hit him, just hit him. Yeah. So people are very, very happy. We're not going to watch that whole thing. Let's see here. Aw. Okay. There was one more funny thing that I had about Trump doing something about bowling pins, but I guess we'll skip that. Several IRGC facilities and Iranian border guard positions were struck in Marevon near the Iran-Iraq border. And you can see... Oh. Yeah. Smoldering stuff. More smoldering stuff. And then another bomb going off. Yeah, a lot of people thought this was a Moab or something. It's not a Moab. This is a bunker buster bomb. 30,000 pound bomb. Let me play it from the beginning. That's the aftershock. That is insane. That's a huge bomb. So, a lot of bombs. And then the U.S. is actually currently loading more B-1 bombers with huge bombs, and the UK is helping the United States load these bombs now. And you can see that's all the equipment. And they're just loading one huge ass bomb after the other. And then these are the current casualties from attacks on both sides right now. You can check this out. So it's mostly Iran and Lebanon. Those are where most of the injuries and people killed have occurred. Everyone else is under, 20 killed. There's been a few thousand people reportedly injured in Israel, and about 150 injured reportedly from the U.S. military. 12,000 injured in Iran. A lot of people need help, because I bet some of them are citizens. Let's see here. Here's an overview of all the locations being bombed in Iran recently. This is as of March 11th. So all these areas here in blue. So right here, all of this. Oh, look, this is like a paw. Look, it's like someone has an opposable thumb here. Yeah, it's like a pet paw. But yeah, there are these red dots here are actually attacks on civilian vessels from Iran. And then the yellow dots are Iranian attacks on civilian vessels yesterday. Okay, let's keep moving on. We're going to get through this really quick. Don't worry. Here's the latest report on the number of drones and ballistic missile launches. The latest number. I've said since we've started following Operation Epic Fury that this is one of the most important charts to be following. We want to see all the ballistic missiles, all the cruise missiles, and all the drones being launched by Iran down to zero. Because at that point, the Iranians will not be able to attack anyone in the Middle East, or people going through the Strait of Hormuz, or people going into the Persian Gulf. These numbers need to be as close to zero as possible. And right now, this number right here is what we're looking at. I know it's a little hard to see, but I'll read it out. It's got 39 drones. It says Iran launched 39 drones on March 11th, 7 cruise missiles, and 6 ballistic missiles. Now, this is new because this is the first time since March 2nd that Iran has been launching cruise missiles. Their ballistic missiles have been going and trending down the last 3 days. And it's been great since March 9th that the number of drones has been not just below 100 here, but also below 50. So here's 100, and here's roughly where 50 is. And we are below 50, below 50, below 50, which is very nice to see, but these numbers need to be to zero. And that will also help reduce insurance. When that number goes to zero, all the insurance companies are going to adjust their insurance rates so that then people can afford to actually pay for the insurance to go through the Strait and into the Persian Gulf. However, there's a lot of facilities in Saudi Arabia and Qatar and all these other countries that are offline effectively. And they're going to be offline for at least a few weeks, if not a few months. And there's probably not as much oil to pick up in the Persian Gulf right now because those facilities have been turned off. So what will be picked up instead are reserves. And we'll be going over all the new stuff we know about reserves that have come out in less than the last 24 hours. Now, Iran does have a new supreme leader. We can watch this.
The supreme leader is wounded and lucky to be alive. This is Mojtaba Khamenei, the 56-year-old.
So Mojtaba Khamenei is the new Ayatollah of Iran, And there's all these reports saying that he's dead or he's effectively disabled. I have seen no proof of life from this guy. And hello, Ani. Nice to see you too. But I was actually telling you about this the other day in the post-stream Discord voice chat that there's been no proof of life of Khomeini, the new Ayatollah. There's been no proof of life of this guy. There's been reports that the Iranians are appointing him and probably trying to keep him hidden because the U.S. is going to kill him once they find out where he is. Let's not kid ourselves. Like, oh, the U.S. might be looking for... No, they're going to bomb the shit out of him if they know where the hell he is. Because he already apparently has been suffering concussions. He's already has some wounds from a prior attempt to kill him before. So the U.S. wants this guy dead too. Okay. The other thing is the Ukrainians have joined the front against Iran. So you can see the Ukrainians are now here at the Persian Gulf on the opposing side of Iran. 3 professional drone teams from Ukraine have arrived in the Middle East in order to support efforts to neutralize Iranian drones. The first 3 countries being supported are Saudi Arabia, Qatar, and the UAE. And this has been confirmed by Zelensky. We can go along with that. Actually, nearly 7 months ago, yeah. So that's just more of the stuff. So the Ukrainians have joined. Here's actually a video of the Ukrainians launching some counter-drone materials. Check that out. So that's the drone that they're trying to shoot down. And this is a drone that they're launching at the drone. Shit. And there it goes. So that's just one of the weapons that the Ukrainians are very likely bringing with them. Ukraine is also upping their own drone protection and drone production. The trajectory of Ukraine's drone manufacturing output is impressive. 7 million drones projected this year. They are building a lot of drones. A lot of drones. The U.S. also dropped some propaganda.
Laser focused. Obliterate Iran's missiles and drones and facilities that produce them.
Holy shit.
Annihilate its navy and critical security infrastructure. And sever their pathway to nuclear weapons.
There's been some great videos out of the White House. I've been enjoying a handful of them, but actually, maybe if I scroll down here a bit. There was... Oh, this is it. What does bowling have to do with Operation Epic Fury? Gotta be kidding me. Gotta be kidding me.
Here comes the heat from the USA. Pins down. What a strike.
Oh my god. Oh my god. Oh my god. That is... It's very entertaining, that's for sure. It's very, very entertaining. I saw some geopolitical analysts that I follow. They saw this yesterday, and they were all, like, jaw agape, saying, oh my god, this is, like, in such bad taste. And I'm like, I don't know. I'm kind of having fun watching this. I'm kind of having fun watching this. But I absolutely get everyone else's point of view. You know, I I just am like, I'm going with it. This is what I voted for. I don't know if actually this is specifically what I voted for, but I'm kind of glad I got this meme. Oh man, if only geopolitics from prior administrations was this entertaining, right? But that's what you get for putting a TV star, a very successful businessman and TV star, in charge of the White House. He lets probably some Zoomers create these freaking AI edits for the White House with bombing footage from a U.S. military operation. This is what I wanted to show at the beginning of the stream. Right after I showed that collage of all the Iranians celebrating and saying, "Uncle Trump, thank you. Please keep sending the bombs. Please get rid of these people." Okay, so here's another thing. This is the U.S. blowing up an Iranian missile launcher. And you can see the thing just explodes. So there's an Iranian missile launcher huddled in that tunnel. And they just send an insane amount of explosive ordnance over. And then the thing turns into a jet test engine. Oh, man. It would not be fun to be in that tunnel. I would not want to be in that tunnel. Australia is also helping out by sending an early warning aircraft. So this is a special type of aircraft that is some kind of radar, right? Provides 360 degrees long-range surveillance, MESA radar, improving early warning and coordination of air defenses, while Australia will also send AIM-120 ARAM missiles to support interceptions. So the Australians are getting in on the action, and this is also going to be here in the Persian Gulf by the end of March, which also, guess what? That aligns with what Witkoff said when what we read at the very, very beginning of the stream. Witkoff said, oh, by the end of the month, within a week or two, we're going to have all this deterrence. We're going to have escorts get all of the tankers through the Persian Gulf and through the Strait. And, every single major European country and every single Middle Eastern country is doing what they can right now to help intercept these. Hold on, I got a little bit of discomfort in my ear. But you guys get what I'm trying to say, right? All these countries are on the same page with all these Middle Eastern countries and all these European countries, and even a lot of Asia countries, especially India, are definitely on the boat of, we got to handle this thing with Iran. We got to make sure that they stop blowing up tankers and get this handled pretty much immediately, which is why I have bullish expectations. Because as soon as the Gulf is declared under control, oil is going to, I think, go back down. I posted a poll, and I put a link to that poll. It's on the YouTube channel right now. It's in the posts section of the YouTube channel, and it's just a little poll. Do you think oil is going to go up $15 from here? Because if we look at the oil charts, I believe oil is still at $90 right now. It's at $93. Do you guys think it's going to go maybe to 105, right around here? Oh. Which is right around here. That's 105 at that line. Or do you think it's going to go to about $75 here? So this is 75 and this is 105. So do you think it's going to go up or down first? Which one of these do you think it's going to hit first? 105 or 75? Because look, this has been a nice little trend so far. And if things stay disrupted for a whole other week with no meaningful improvement, I could rationalize hitting 105 next week. I could easily rationalize hitting that. And then guess what? This that Euro CAD trade I took, I'm going to have to hop out of that. That's not going to work out, right? In this scenario. But we already know that the clock is ticking. We know the clock is ticking before the US and the Australians and the South Koreans, right? Yeah, and this is on Brent. This is the CL futures. It's on, no, not on Brent. This is on crude. So if you're on a different chart with a different oil, it's going to have a different price. If you're on something else, it's going to have a different price. But we have all these countries who are going to be appearing in the Gulf with military assets to deter Iran's capabilities to attack and to keep the Gulf safe and to let ships transit the strait and to get the economic engine of the Middle East back online to avoid a significant economic crisis. If this were to go on for 2 or 3 months, that would occur. So, what we're doing, I believe, accidentally, there we go. Now it's all good. So yeah, you guys think it's going to go to 105 first or to $75 first? I'll just say, I think if, you know, the Iranians are still launching missiles and attacking as the allied countries, just to keep it simple, as all the allied countries come together and form up at the Persian Gulf, it's going to take about another week. I could see us hitting 105 within the next week. I could very easily justify seeing that. But at that point, it's like, well, how much longer would you reasonably stay up there? If by maybe the end of next week or into this week, because remember, the deadline is end of March. Talking 18 days here, so maybe end of next week, sometime in the following week. I mean, you could end up with something that looks like this. It just goes up and then down as all these allied forces actually build up in the Middle East and remove effectively Iran's ability to blow up ships, to have any control in the Strait of Hormuz or the Persian Gulf. That'd be a big deal. So this is kind of what I'm seeing. So I think if we're going to hit either 105 or the 75 price here on the CL futures first, I think we're more likely to hit 75 next. Or rather, 105. I misspoke there. I think we're more likely to hit 105 next. But we could very, very, very quickly go back into the 70s once we have transports and once the Allied forces are there intercepting all the missiles and the U.S. continues their bombings. I mean, what if in the next 2 weeks they are able to get the Ayatollah, the new Ayatollah? It'd be a big deal. So look, those are the things to watch out for. Those are the things that I'm watching out for. And now we're going to get into some more commodity-specific stuff. Core inflation came out a while ago. It came out yesterday. Core inflation came out at its lowest in nearly 4 years. I don't know if this is actually going to hold up for very long, because I think March we will likely see some increase in inflation, and potentially in April too, because there will be some disruptions from facilities that have been turned off now that need time to ramp back up. Once the Strait and the Persian Gulf, once allies have secured the Persian Gulf against Iran, it's going to still take some time to get production back up. So I would not be terribly concerned in increases in inflation that occur over the next couple of months here, especially if, I mean, in all seriousness, a lot of the inflation concern is a bit overhyped right now, because it's mostly just been in oil, and a lot of countries are pulling from their reserves instead of buying oil at these prices. And speaking of that, you can actually see that there are Chinese ships that are crossing the Strait of Hormuz, and then there was another Chinese ship that was hit. So it's like the Iranians don't even know what ships to hit and what ships not to hit. Let's see here. Ships are crossing the Strait of Hormuz with a destination for China, yeah. And Lord knows China needs it, because they're saying the longest gasoline lines. So apparently this is a line to get gasoline right now in China. Yeah. So there's the gas station. There's the gas station. And this is the fucking line to get gas in China. Honking isn't going to do anything, man. But look at emergency vehicles just trying to pass on through. Look at that line. That is insane. That's a lot of people trying to get gas in China right now. So the Chinese really need that gas. There's also a massive Iranian oil complex that was wound down. So you can see here that this is an image. All these red spots here are all of the oil production facilities that were active before the war. And this is now after. That's pretty bad. So China's going to need, at least temporarily, until all this stuff comes back online, until all these production facilities here marked in red come back online. This is a problem for China, because all those facilities, they don't just come online in like a day or two. And depending on how much damage there might be, if there was any attacks on these facilities here, it could take a bit longer than most people expect. Yeah. Those are some negative images. Let's see here. What's next? Iranians are also still attacking Middle Eastern countries, even though the president of Iran said that they would not do that. Here's an Oman oil storage facility that's currently up in smoke. Everyone who's following the war has seen this. Everyone has seen this. Everyone is talking about this specifically. It actually moved markets, I think, a bit when this happened, because this was kind of a big deal. Iranian drones struck Oman's largest oil facilities at the port of Salalah in Oman. And you can't really take the Iranian president at his word now, because he said we're not going to attack any more Middle Eastern countries. And here they are attacking one of the largest oil storage facilities of a Middle Eastern country. They also attacked a Thai tanker. Sal Mercogliano actually covered this exact post specifically. And you can see this is where they sent a drone, and it just totally ripped apart this boat here. Another tanker ship was attacked very recently as well. And you can see this just going up in flames. 2 tankers carry approximately 400,000 barrels of oil. Yeah. That is kind of insane. That's that's huge. Did that guy just go? Like, no, 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 no. You're not supposed to do that. Boats aren't supposed to be on fire like that. Yeah. Yes, be disappointed at the boat. Sure. Oh, the boat didn't do his homework. Now he's on fire. Oh no. Okay. And then I said earlier a Chinese tanker did go through the strait. Well, this is actually an image showing, hey, here's a Chinese tanker that had to go back and not cross the strait because there were other ships getting attacked apparently in front of it. And then this guy is bringing up the exact same point I just made. Iran has targeted a China-owned and flagged ship and scared another. What does this tell us? Iranian command and control is likely destroyed, and the IRGC is operating as autonomous cells, often taking cues from public statements by Iranian officials, some of whom have said Iran won't target friendly ships, like the Chinese ones. The cells apparently didn't get the message or the memo and are now attacking friendly vessels, Chinese, Iraqi, Omani, or whatever moves. And this was a problem we highlighted over a week ago. Like within the first day or 2 or 3 of Operation Epic Fury beginning, is that this was a really, really serious problem. And it's one of the reasons that's speculated for why Iran had launched all these attacks after Operation Epic Fury began and destroyed all the leaders of the Islamic Republic. Apparently, just all these autonomous cells were like, well, I guess we have to launch the missiles. Launch them here, 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 and here. Now, supposedly, they were all given targets of who to hit. But from that point forward, all of these individual units were assumed to be acting autonomously way back then at the very, very beginning of the operation. So this issue is still being exacerbated. Still, a week later, very much exacerbated. And it shows that even if, let's say, the Islamic Republic did get some grasp of power back, how quickly would they actually be able to rally and get command over all of these different autonomous cells? It's not... I don't know how reasonable it is to understand how quickly that might be. I have no expectation for that. And then let's see here. Iran threatens to send oil to $200 a barrel, right? This moved markets quite a bit. Then they're saying, oh, not a single liter of oil will pass the Strait of Hormuz because we don't like America or the Israelis. And it's a 2-minute statement. We're not going to watch it. But the main headline here was, not a single liter of oil will pass through the Strait of Hormuz, and found that any tanker bound for the U.S., Israel, or its allies is a legitimate target. And then prepare for 200-barrel oil. Now, I don't know about you guys, but, you know, scaring off and attacking Chinese vessels, I don't think that qualifies. And considering the Omanis, you know, everyone in Oman was told, hey, by the president of Iran, we're not going to attack other other countries, will attack the U.S. and Israel because they're currently in an open operation against us. But they can't trust what they're saying, because for all intents and purposes, the Iranians don't have control over their military completely. They just don't. At least it definitely seems that way. It definitely, at a minimum, it kind of seems like they don't have control over their military. Gee, I wonder if it has anything to do with the constant bombing from the United States. Trump is directing his Department of Energy to start releasing oil reserves. The International Energy Agency is also authorizing the release of oil reserves that they're watching over. So the Department of Energy is set to release 172 million barrels from the Strategic Petroleum Reserve, the SPR. Trump is using the reserve for what it's actually meant for, preventing hostile nations from blackmailing the U.S. with oil prices. Another reason why I'm not setting huge expectations for super high oil prices or listening to the threats of the Iranians on, $200 barrel oil. Let's see here. This is the Biden thing. The International Energy Agency, the IEA, also had now authorized over 400 million barrels from various nations' reserves. Iran's only card left is spiking gas prices in the U.S., and Trump isn't letting that happen. And it's not just Trump. A lot of countries have, in their own self-interest, they do not want that to happen, which is why so many countries are sending their own forces. They're sending what they can to help suppress Iran from blowing up more oil infrastructure, from blowing up more oil tankers. Now, let's see here. Chris Wright. He has a statement here. This is like a short one.
For what is happening in Iran to abate.
So this is the guy who's actually in charge of the United States Department of Energy here.
And for pricing to be anything approaching what we had come to see as normal before this.
Well, we've repeatedly said the conflict will be measured in weeks, not months. We announced the release.
Let me just turn this up a bit.
Of the Strategic Petroleum Reserve, using it for what it's for. As you mentioned, there's an interruption in oil flows through the Strait of Hormuz, and we're trying to offset some of that missing oil by releasing oil from over 30 countries around the world to salve that. They don't fix it. We don't have a price knob. But at the end of the day, after we've defanged the Iranian regime to cause trouble in the world, you will see a surge of investment in the Middle East. You'll see commerce and peace break out and massive expansion in energy production, just like we've done in the United States. Oil prices, natural gas prices, all energy prices, except for electricity, because that takes longer to fix, skyrocketed under the Biden administration and have trended downward under the Trump administration. They're up right now, and we're going to go through a period of a few weeks, as we've all said, with dislocated energy prices. But on the other side, we've removed the single greatest threat to that oil and natural gas producing region, and we'll move on to a much better place. That's the agenda.
Okay. And that was something officially released by the U.S. Department of Energy. Okay. That jag was getting a little hot. I had to take it off. Here's how many days. Actually, no, before doing that, the G7 have more than enough oil to utilize from their reserves to counteract and suppress the price of oil significantly. Let's see here. Excuse me. The G7 sits on 1.1 billion barrels of oil in reserves. The U.S. has 450 million barrels per day alone in production. Japan has the biggest buffer with 109 days of import cover in their reserves, with the rest of the G7 sitting at around the 90-day mark. Okay. Prior to the Iran war, around 20 million barrels per day of oil was transiting through the strait. Today, this is close to zero. If history is a guide, and the G7 released 360 million barrels this time, half from the US and half from the rest of the G7. In the next 6 months, this would equal about 2 million barrels per day. And that does not cover the 18 to 20 million barrels per day gap that Iran left. Conclusion: a potentially coordinated oil reserve release by the G7 is likely to slow crude's rally rather than halt it entirely, which is why all these countries are sending a bunch of military support to the Persian Gulf in order to secure it so ships can actually go through. And you can see Canada does not maintain an SPR due to its status as a net oil exporter. So this is the current allocation of the 1.1 billion barrels in strategic petroleum reserves of all these different countries. And then you can see the number of days that they have available. We've looked at this chart before. Alrighty. And then, let's see here. Current oil refined product exports in the European Union. Middle East Gulf refined product exports plunge. So these are exports to the EU, and it just falls off a cliff as expected. There's a couple more things. South Korea is reactivating their nuclear reactors in response due to the lack of Qatari LNG. Now, this is it here in Korean. But it seems like they want to get this stuff started ASAP. So before summer, they want these nuclear power plants online to help supplement energy needs in South Korea. Takaishi in Japan is getting ready to release those reserves that we just talked about. And this is Weston Nakamura. We love him. Takaishi said Japan is preparing to release 15 days worth of private sector reserves and 1 month of state reserves. Well, we have decided to release reserves without waiting for the formal decision on an internationally coordinated release in cooperation with the IEA, the Prime Minister said ahead of an online meeting of G7 leaders to review the situation in the Middle East. Kind of a big deal. So yeah, Japan is just going ahead and releasing their oil from their reserves. We're almost done here. Mexico is being especially negatively affected, and they are very negatively exposed to higher oil prices, even though they're an oil-producing country. And this is a long post. It's a long post. But effectively, the oil industry in Mexico has gone into disarray. It's been incompetently run, and a lot of the green environmental people got into government and have been obstructing the oil industry in Mexico from being able to perform. Approximately 74% of Mexico's natural gas demand is satisfied through imports from the United States. Most of it's flowing from Texas shale basins. This dual dependency means Mexico's energy security is effectively externalized. Oil above $100 immediately raises refined product prices in the Gulf Coast market, where Mexico buys most of its gasoline. At the same time, global LNG competition and oil-linked contracts tend to push natural gas prices upward. Mexico does not maintain significant strategic petroleum reserves or reserves of gasoline or natural gas to buffer these shocks. if global prices spike while domestic prices are artificially suppressed, the imbalance manifests not as higher prices, but as shortages, which, you know, Mexico's already going through hell with the cartels. And now you're going to talk about having potential blackouts and brownouts and rolling versions of those things in Mexico. You're going to make a lot of people very, very, very unhappy with their government and with their cartels. And you can end up with potentially a risk that people get a little bit more mad in Mexico than they otherwise would be due to the discomfort of not having that energy supply. Now, I'm not here saying, oh, Mexicans are going to get moody because they don't have energy, and so they're going to rise up. Like, no, it's just, I mean, look at what happened in Cuba right now. They're having total blackouts right there, and people are starting to very seriously organize against the government because they have no energy, and a lot of them can't do some of the work that they need to do or enjoy the quality of life that they want because of their government's actions. And also the U.S. taking control of Venezuela and not sending oil to Cuba, which was where Cuba was getting most of their oil from Venezuela in the first place. I really want Mexico to do well. I really, really don't want there to be problems with Mexico, but the cartels got to go, and the oil industry in Mexico and it has to kind of come back. There's so many great things about Mexico. Mexico would be could be so insanely prosperous, especially if they just got rid of the fucking cartels. Oh my God, everyone would love that. Everyone would love that. Just north of Mexico is California, right? And Trump is preparing to invoke supposedly some Cold War era powers to skirt around some legislation that is preventing oil companies from building offshore or activating offshore oil rigs on the California coast. Trump is set to soon summon authorities under the, quote, Defense Production Act to preempt state laws and ease permitting for Stable Offshore Corporation, a Houston-based company looking to restart significant production from a cluster of offshore platforms in California. And California has had so many oil and gas companies exit because of their crazy, crazy green laws. They've just been incredibly strict, and the permitting is effectively prohibitive. Okay. I only have one more thing, and it's not related to any of that. It's on the French municipal elections. Nearly 4 out of 10 French people say that the outcome of these elections, which, by the way, happen on the 15th and the 22nd, will influence their vote in the next presidential election, which is in 2027. So this is important to follow and watch if you're trading euro, right? So if we go to euro dollar, it'll be important for this asset right here. And so far, things are looking so good. So now we can get into chart stuff. Let's see here. Financialjuice.com. Let's see. Anything that just came down that was new. U.S. building permits, Canadian building permits, U.S. jobless claims. U.S. jobless claims went a tad higher. U.S. initial jobless claims actually came in a bit lower, which is good. You know, it came in the same as the previous number, so marginally good, marginally better. Trump's going to be speaking in a few hours, around lunchtime, my time. But man, I went ahead, pretty much covered everything I wanted to cover. We did some pivot point stuff at the beginning, and we did some geopolitical stuff. We covered all the geopolitical stuff. And as far as the expectations go for all these different assets, we covered pretty much the baseline expectations. Oh yeah, we can full screen this thing again. We could probably do some week ahead trade plans. That would sound good. I'd like to do some week ahead trade plans. Now, we're not quite there at the end of the week, but I think we're arguably close enough that we could start to get an idea of maybe what we could be doing for the week ahead. So I'm going to pull up the dashboard here, the strategy dashboard, and look at the standard and range bias odds. And let's see here. So for next week, which is this bottom half right here, and I'm in the way, I got to put myself over here. Let's see. Standard bullish, stop loss is 43%. And then over here, standard, or rather the range bullish, is 26%. So out of all of these, the one that is most likely to not get stopped out is the range bullish. So I like that. Let's go ahead and change this to range bullish. There we go. And let's see here. The entry odds are pretty low. So arguably, it seems like the entry might have to come a bit earlier. And then 60% odds of overshooting the target, which means going past R1. So probably easing into a trade below central pivot and between central pivot and S1, getting into the trade around that range, and then taking it at least, it seems like, frankly, at least past R0.5 would be the case. So if I hide the dashboard, something along the lines of this, at least that conservatively. So this would be the long, like so, something along that lines. And this would be the conservative play, but 60% of the time you go past R1. So Lord knows how far that'll go. But we can also do unbiased pivots and look at the entire distribution of high odds. And it seems like the highest probability seasonally of finding the top next week, based off pivot points, using seasonal historical data, is between R1 and R1.5. So something that is kind of like a shortened bullish bias. A shortened standard bullish bias, because the standard bullish bias has you getting out right in this area here between R1.5 and R2 and getting long here, right? I'm going to go ahead and move myself over to the other side. Okay. But we have to be open here. So the stop's probably gonna have to be a bit lower. I I mean, you can go ahead and probably put your stop at the swing lows right here. That could work out. But this seems like the plan for next week based off interpreting this indicator. And then we can do New Zealand. Well, actually, I want to just do a few select ones. Let's not just go down the whole list, right? I want to do a few select ones. I don't know. How's the CAD doing? How's the Euro CAD holding up here? Yeah, it's holding up fine. Wish it was doing a little bit better, right? But it's doing fine. It doesn't seem like we'll end up hitting this, though, which is actually preferable for this particular trade right here. But this trade is not sized up as much as what I would have sized up to down here. So, kinda sucks, but not expecting price to go down here in the next less than 24 hours practically. Okay, so let's go ahead and check out our odds for next week. We have a bimodal distribution. So a bimodal setup for the high odds is this. So odds of finding the top for next week between any two set of pivot points using seasonal historical data can be between here or here. There's a lot more variation in this peak, and the odds are a lot more concentrated in this peak. So it's a bit more likely to find the top here between central pivot and R1 than it is between R1.5 and R3. But you also need increased volatility to reach up here. So let's say over the weekend, we get some really good information about the leadership in Iran changing. Maybe the Ayatollah is bombed. Maybe there's a day where 0 drone strikes are launched. I'm not terribly risk on in the first half of next week. I'm not terribly risk on. I still think, especially also over the weekend, it's been pretty risky the last couple of weeks holding over the weekend, right? We've had gaps here and gaps here. The last 2 weeks we've had gaps down. It doesn't necessarily mean next week we'll have a gap down, but considering all the research we just went over, it's going to take about at least another week for more of these allied forces to get their assistance to the Persian Gulf to actually combat Iran from intervening in the Gulf to actually make it secure for tankers to flow through it. So it's going to probably be something that happens over here towards the end of next week, but more likely sometime during the following week, all the way maybe out here. So I'm on the more careful side of saying, if I go ahead real quick and delete these drawings, saying something like, we're just going to go up like that, and we're going to go and trade at these highs. No, that doesn't seem like a reasonable expectation to me. So let's look at the low odds. If it's more likely we're going to maybe go lower, and this is also quite nice. This is a nice, chunky distribution. It's unimodal. There's a single peak. So most of the time, the top, or rather the bottom for the week, is found somewhere around here. And you can see we have the probability weighted pivot line right here, which literally takes these odds and each pivot point line and uses the odds as weights against each pivot point and compresses all the information into a single line. That's how you get your probability weighted pivot. So I I would probably expect to creep lower. Creep lower. I would not be surprised to see EuroCAD trade below S0.5 next week. And then from there, go up. So from, let's say, here, down, and then up. But this actually could lead into a more range-bound trade setup based off the pivots. So if we open the strategy table real quick, and I move myself over here, the bullish range for next week, stop loss odds are 19%. Entry odds are 28%, which actually are the highest odds here. The highest odds of actually finding an entry for any one of these pivot biases, the highest odds are of finding your entry is right here. You can actually see it says 28.57% here. And then when you look at the chart, you can see the entry bin pivot-wise is S0.5 and S1. And that has 28.57. So let's go ahead and there we go. Update our bias to bullish range. And also turn off the strategy dashboard, move myself back on over. And there you go. And you can see the stop loss odds of 19% right there, same as it was on the dashboard. Okay, perfect. So that would be the setup. Short down into here, and then take it into a high. Either the likely high around here. This is about, I mean, you can say 40% of the time, the top comes in between central pivot and R1. And you can say that because you notice how we have this 19 right here between R1 and R0.5. And then we have this 23% between central pivot and R0.5. If you want to find out, for example, the probability of getting the top between any two pivots, like central pivot and R1, all you need to do is add the odds between them, right? So if you add 19 and 23, you're getting 22. And you can round up to, or rather, my bad, 42. And then you can round up to 43 because the odds, these decimal odds get to 86%. So you can round up to 43% if you want. So about, arguably 40% of the highs next week, the tops for next week, occur between these two pivots. And then 47, roughly, percent of the time, the top occurs past R1. So there's a nice asymmetry here for being long down here. And actually just to be short from here into the beginning of next week. Now, again, this is seasonal historical data. We're dealing with exogenous geopolitical shocks that can easily override using this kind of data and make it, frankly, useless, right? But we can use this data to help us because a lot of the geopolitical events are actually still impacted by news events. You know, every single week, seasonal events are still occurring on the economic calendar that are set to print next week. And those can still come out positive. Those still can accentuate the consensus dollar bearish trade setup that so many people have tried to be on this year since December of 2025, essentially the last 3 or 4 months. again, that was kind of the consensus. So it'll be interesting, to say the least, if this is the trade plan we end up going with. So I'll go ahead and actually draw the arrows here. So what I like to do whenever I'm on stream and I am setting up a trade plan, I like to do, or even privately, whenever I'm doing trade plans, I prefer to have these arrows with timestamps on them. So today is March the 12th. So I put 2026, 03, 12, and then I timestamp it. But actually, I should do that. And then I timestamp it 06, 24 for when I made the drawing. Now, these pivots are still going to move quite a bit, so I'm going to kind of allow myself to move this a bit, just so that then I can illustrate the point of, hey, this was a trade set up. This was a trade plan set up for going from at some point in the close of this week down to the entry of the bullish range bias for next week. So when we get to the close, I may move this. I may just make a new timestamp, a new drawing. But whenever I say I'm gonna ever change these timestamps, because usually I just lock them and I never touch them again. But in these scenarios where you're doing a trade plan for the week ahead on an indicator that is still repainting for the following week, which is fine if it repaints for the following week. It's an issue if it repaints in the current trading period, which it does not. But this needs to repaint for it to work. Crap, I didn't mean to touch that alert. So right here to here, that is the other setup. And then we'll make that one green. And then we can do 2020, 603, 12, and also give that a timestamp. There you go. So now it's going to be a lot easier. See, it's a lot easier to keep up with a streamer who's doing trading when you don't have to go back and watch every single video that they've ever done to find out what their trading expectations were from week to week, right? Like when you have these trading drawings here to say like, hey, this was a winner. Oh, that was a loser. Oh, this one's currently on and that trade might be in the future. And then to have these expectations also on, it's a lot easier to follow along with what's going through the thought process, right? It's a lot easier to think through what's going on. All right, so now we've done a trade plan and we've covered our geopolitics. We've covered a lot of probability pivot stuff, and we covered quite a bit of we covered pivot conditions and Wayne's pivots. I went over a few things with that. So yeah. I'm just reading the chat. I think I might have been ignoring the chat for a bit too long this stream. But I am ready to start hanging out with some friends on Discord now in the post-stream chat. I think I'm ready to kick it back a bit. So if you want to hang out and talk more trading with me, I think now's a good time to put the stream away. So I'll see you guys in a bit, and I'll see you guys on the Discord. And again, if you want to hop into the Discord, links to that in the description. Just go to the WAP store and join the Discord there. So I'll see you guys in a bit. Looking forward to see how this performs. We'll definitely be covering it over the next week. But also, whether or not this actually follows through or not, I think we've set up enough caveats for whether or not this trade plan will actually work or not with all the geopolitical exogenous events going on with Operation Epic Fury. So we'll just watch it day to day and see how it goes. How does that sound? Alright, you guys. And seriously, thank you guys very much for watching. Look forward to seeing so many more people in chat. Looking forward to seeing everybody in the Discord. I'll see you all